All right. Good morning, everybody. It is October 5th, 2023. It is 8:45 a.m. We are 5 days into the month of October, and we are here. It's time to talk about markets, stocks, the economy, Google, Elon, oil, all of that good stuff we're going to get into. We're going to discuss. Oil prices are coming down 5% in the past couple of days. We're going to be talking about that. Google basically building a new device tailored around AI, which is why Google might just be one of the winners in AI with their Pixel 8. We're going to be talking about that. Elon basically saying, look, if you want to post any link on X, formerly known as Twitter, you better just post it on X without having to post the link. And he's like gutting the ability to get any distribution on your website from Twitter, which that used to be Twitter's purpose, but I can't blame him. That's what Elon is trying to do. And then we got to talk a lot about what's going on in the macro. We're actually seeing bond yields come down from their 16-year high, which is really good. Got some good job reports yesterday, some continued good jobs data today. That's sending equities going a little bit higher in the pre-markets, nothing too crazy, but enough data for us to be like, all right, maybe we're getting somewhere. Maybe we're capitulating a little bit on the bottom. Still have not seen the 200-day moving average on the S&P. If we hit that anytime soon, maybe we have a quick reversal. But until then, we're still having a little bit more of a reversal back to a higher equity market, which hopefully we end up getting towards the end of the year. Peter, I look forward to hearing this every morning. Thank you for being here. I look forward to you all being here every morning. Remember, it is another day on planet Earth. We've got very few of these days. We are all going to die very soon. If you were keeping up with me on Twitter yesterday, that was the topic of discussion. So it's important to enjoy these days, enjoy these mornings, because we get very few of them. And enjoy your phone, okay? This is the new iPhone 15 Pro Plus case I got yesterday. It's very important to enjoy your phone when you get a chance to enjoy the phone. And honestly, I love this color, bro. If I ever get a Tesla, this is the color I want. I haven't had this color on a phone in a very long time. I love this color so much. This is like a beautiful, beautiful color. Like, this just feels great. And the phone's fast, all that good stuff. Look at that, 97%, baby. Hopefully it lasts the whole day. I don't have to charge it the whole day, but there's just a good feeling in the air when you wake up in the morning. Your phone is charged. It's a nice cover. You got good old carp on the cover. And, you know, you can do what you got to do. So it's a beautiful day. Let's get started. We got a lot to discuss, and let's get into the market open. Sasky Rose, Don Harkis, Matthew, Marcus, Socrates, Don, Van, Ty Gordon. So I wish the faces were bigger on the thumbnail. I love looking deep into the soul of, I love looking deep into the soulless eyes of our billionaire overloads. They are billionaire overloads. Bay Ray, Olman, Edits, Peter, Bryant, Morrow, Joseph, Monty, Doug, Emmanuel, my guy. For those that don't know, Emmanuel was sub number 11. Emmanuel will always have a beautiful place in my heart. Emmanuel, thank you for being here, man. Edmund, Max Deuce, Garcia, June, Felicia, Big Ray, Juan Ortiz, Johnny, Brian C, Tobor, Mateo, what's up? Seth E. Roth, Hodge, Phil, Jeremy, Noland. All right, let's get into it. Garcia says Amit just wanted an excuse to show off the carp wallpaper. No, that's not the case. All right, I want to show you guys the blue cover, and the carp cover just happens to come on, and so it is what it is. Like, it's a beautiful phone, very fast, and you know, the cover just happens to be shown. The wallpaper, I can't do anything about that. But look, now we're at 96%. I don't like how the battery life is going. We were at 97 2 seconds ago. This battery life better not be bad on the iPhone 15, bro. This is my first day of really trying it out, because I'm not tolerating some crappy battery life, yo. I paid too much. Well, I didn't even pay that much money because I traded it in, but still. Okay, before we get into the market open, I want to tell you guys a little bit of a story, okay? It's a very quick story. This is what happened yesterday. This is the titanium one. Yes, Doug, that's correct. All right, this is the story that happened yesterday. And this, to me, exemplifies. So what I'm going to show you in this tweet, this is, if I had to define my personality in one tweet, it would be this. And I hope everyone can find a story similar like this that they think defines their personality. Because after I tweeted this, I was like, you know what? I think this is who I am as a person. Okay, so this is the tweet. I went to the dentist yesterday. I had to get a crown because I'm a prince. No, I had to get a crown because my root canal. I said, just got back from the dentist. And my dentist is a woman, right? So she was trying to be so serious, talking to me about teeth. She was like, you know, your family has a history of heart disease, diabetes, teeth issues, all this stuff. And then I stopped her, right? Because she was saying all this stuff that was like bad about like my family history. And I was like, you know what? We also have a history of good looks. And she rolled her eyes so hard, bro. This is the funniest shit I had experienced in so long. And I think this is my personality in a nutshell. When you're saying something serious and saying something like, that's like meant to be more, I guess, I don't know, like sophisticated, and you make a joke out of it, I realize that's my personality. If anyone ever asks me, like, who am I as a person, this tweet right here is my personality. Crossroads was like, is this legit? And because people didn't believe it, I was like, yo, she was in my mouth. She was like going through my teeth, like buzzing around. She was saying this stuff. And then with like my gargly mouth, I was like, look, if you're going to mention the bad, don't leave out the good. And she started laughing. So hopefully a quick little story that just lets you know to not take things so serious in life. My family does have diabetes. We do have heart problems. We got all that stuff. But, sometimes in life, you got to just have some fun and keep it going from there. Now, she also had an assistant. An assistant who was also a girl who was laughing her ass off this whole time, because I don't think her assistant ever worked on someone who had the balls to just like say that. And it was really funny because she started laughing. And then after she did my teeth, I started talking to her assistant and just chopping it up in a little riz, what I'm talking about. But her assistant was pretty cute. Anyway, I think that's the point of life. Sometimes you just gotta have fun with it, do what you got to do, and not take things too seriously as they come. But you got to have the balls to say some of that stuff, and then you also just got to kind of say it. All right, moving on. Let's get to the first topic of the day. Brent oil is down. We got oil coming in down at $85, which was really a good development that we saw yesterday. So let's pull this up real quick. Oil was at 95 last week. And, I'm showing you the tweet. I can't get enough of the tweet. Here we go. Brent day last financial over the past 5 days down 8%. Not bad at all. Seeing oil was at $95 and it needs to come down back to some normal levels. Now, this is really important because we were talking about how OPEC has a ton of oil. They're just not putting it on the market because they're doing, whatever they need to do to manipulate prices. But inevitably, it was going to come back to normal, right? And if we can get this back down to 70, or at least 80, this is going to be really good for the overall markets to see oil come down. On top of that, because oil came down, we got a little bit of a decline in the 10-year treasury. So if I pull it up right here, I know it still looks pretty high at 4.754, but it was higher than this just yesterday. So the fact that it's coming down a bit is not, too bad. And I think the reason it's coming down is because oil is coming down. We're starting to get a lot more inventory onto the markets, which is important. And jobs data was really good. So yesterday, 89,000 jobs we added in private payrolls. Look at the official number on Friday from the U.S. government, but ADP reported 89,000 jobs. We expected 180,000. So we had 100,000 less jobs we added into the market. And then today, this data comes out. U.S. jobless claims increased slightly to 207,000 for the week. So initial filings for unemployment benefits totaled a seasonally adjusted 207,000. Below the estimate of 210,000. Continuing claims were little change with 1.64 million, below 1.68 million. So these are the people that are filing for unemployment. On one level, filing for unemployment is bad because the government has to keep paying that out, right? Which is like bad for spending. But on another level, you'd rather have people getting unemployment than like getting jobs. I know it sounds counterintuitive, but that's just what it means to get inflation come down, because, they'd be making more at their regular job. So it came in below the estimate, but very slightly. But we did have about 207,000 people file for unemployment. So overall, jobs data, oil data, a lot of this stuff is seeming to come in the right way. And that's getting us some declining 10-year yields, even though they're still high right now. Stock market in the pre-market is down a little bit, 423 in the S&P 500. Remember, we were at 421 yesterday. Yesterday was a nasty day. I don't know about your portfolios, but I looked at mine at one point until it recovered towards the end of the day. It was bad, bro. It was down like 10,000 in a day. Like it was, and like, yeah, I'm used to like 10,000 in a week, but I'm just like, goodness, like what happened yesterday? But it was really because equities kind of fell off a cliff until we got the right data, and that 10-year really screwed us over. Some stocks did really well though. Google only down 0.37% of the pre-market at 135, still doing very well. S&P 500 at 423, not hitting that 4,200 level range at all. And Tesla, for some reason, $260. Tesla was up $16 yesterday, up 6%, down a little bit in the pre-market at 0.38. I did not know why Tesla ran the way it ran yesterday, but it did. And I'm sure someone here in the chat can educate me on this, but Tesla had a phenomenal day yesterday. And so it'll be interesting to see if that Tesla run can keep up, or if that gets any profits to continue to keep going further. Apple update 17.03 addresses the battery issue, hopefully. And I think they're going to address the heating issue as well, because the phone was overheating a little bit when I got it. So yeah, when I updated that, hopefully that changed it a lot. I was up on Tesla, baby. How much is unemployment now with the wages? I think unemployment is $2,000 a month, or it's like $1,200 a month. Yeah, no, it's more like $1,200 to $1,500 a month. That's probably where it's at. So, less jobs in general, better for inflation coming out. Now, we do have October 12th, September CPI. So I'll be live here at 8:20 a.m. October 12th, and we'll be getting September CPI. Most estimates, I think, are going to price this around 3.4 to 3.5, which is about 30 basis points underneath 3.7, which is going to be really good. If we can get, obviously, to the 3.2 range, then I think it's going to be very good. But if we don't get there, then at least below 3.7. As long as we don't go up, it's September CPI, and September oil was still high most of the month. So I think it's going to be tough to get rid of it in September in a significant way. But October CPI for November, which determines if we raise rates, I think is going to be important as well. Another piece of news right here from Johnny. Biden is giving $9 billion to student forgiveness. Now, this isn't a super large student forgiveness. This is for people that have worked in public service. So a lot of these one-off student loans are not really that intense. It's more so people who have worked in the public sector for a long time. It's called PSLF, public service loan forgiveness. So 53,000 borrowers who worked in public service for a decade or more. 2.8 billion for the forgiveness is for 51,000 borrowers enrolled in an income-driven repayment plans, and another 1.2 billion is for people with disabilities. So basically, if you've done, like, I think my sister has been a teacher for like almost 10 years now, or like in the next 2 years she'll be in that 10th year, and so I'm sure she'll get like, I don't know, maybe 5,000 of forgiveness when you do that. That's just part of the PSLF. So it's not, student debt forgiveness going to everyone who just has student debt. It's more targeted, which I think is the better way to do it. But nonetheless, $9 billion is not really moving the needle in regards to reducing student debt. So the student loans that have started in October, I mean, I have to have my first payment on October 26th. That is definitely going to take some money out of the economy. And if that takes money out of the economy, well, that's going to be less money going into the economy as well. Sachin, thank you for being here as well. $9 billion in student debt is still $9 billion in spending. Doesn't matter who receives it. That's true. So maybe that money also just come into the economy via some of the spending that people can do now, because they have that money as well. Okay, so let's transition to Google. Google was one of the headlines in this video, and I want to talk about them. Yesterday, they unveiled some pretty significant updates in regards to their Pixel 8. Why does this matter? Because this device is basically what OpenAI is kind of trying to create in terms of a device that's centered around AI. Obviously, Google being a massive AI play, Bard, their TPUs, etc. Here's an update on Pixel 8 and why their hardware around AI might end up being a bit of a challenge in the hardware space.
Google SVP of Devices and Services, Rick Osterloh. Rick, it's great to have you on the show.
Thanks for having me, Morgan.
So let's start right here with these new phones that and devices you've just unveiled. How much is AI featuring into the design and the functionality of them?
Well, they're really completely designed around the company's latest innovations in AI. We've designed, as you mentioned, a custom chip we call Tensor, and our third edition of it allows us to run really powerful AI models. In fact, we're able to run the company's latest research in a distilled form right on the device, and it powers all sorts of new capabilities that you really can't get anywhere else. We think AI is the future of computing, and Pixel is just one great showcase the company has to be able to show that capability to our consumers.
So what are some examples of the ways that consumers are now going to be interacting with AI? I mean, we keep talking about the promise, the possibility, being on the cusp of some of these new AI capabilities, generative AI capabilities. What is actually now coming to market starting next week?
Yeah, so many powerful tools. I mean, one thing that AI has really clearly been able to influence is how you can just take terrific photographs and then create derivative, beautiful artworks of those photographs. So for a long time, we've pioneered this field we call computational photography, where we really take all of our latest AI and ML techniques and make them so that you can transform photos that might be difficult to see, like if the lighting's poor or it's too bright behind the subject, and make them great photos. But what we've recently added is the ability to easily edit those photos and create new forms of art. So what you're seeing on screen here is one capability that we call best take. So what it does is you take a series of photos and then you can select from the photos you took the best shots of people's faces. So it really gets the photo just right, the one you intended to take. We also have a new capability that we call Magic Editor that allows you to alter a photo, just like you might do if you use like a tool like Photoshop or something like that, and really easily and automatically transform it into something fun or fanciful that you can share with your friends.
You know why this is really interesting? So the price is $1,000, a little bit cheaper than the iPhone 15 Pro Max, the one that I have right here. Okay, this is my iPhone 15 Pro Max with the blue case that I got yesterday. And this thing really has no AI capabilities. I mean, talking to Siri even is very, it seems like I'm talking to like a third grader, right? It's like I'm not really AI oriented. The problem is Apple has an ecosystem, and Apple's ecosystem is so unbelievably powerful in terms of, dude, like I am never switching to an Android, like ever. Like you couldn't pay me money to switch to an Android, bro. It's just, I can't do it. Like I need my phone every day. I'm on it all the time. I can't switch to an Android. For them to introduce all these AI capabilities in terms of it's native to the phone, whether it's you take a photo and then immediately that photo, you know, it can turn into this magical world because of their AI capabilities, or search is more enhanced by AI. There's so many different things there. That's a really interesting value proposition. And this is the first generation of the Google product that's going to be able to get like that. It further enhances Google's moat in the context of what they're going to be able to do with AI. Let me actually just share. I want to share Webull real quick. And then, you know, then it becomes a question of looking at the stock, right? Because the stock is trading the cheapest from a PE perspective out of all big tech at around 28. And it seems like if AI is the revolution, Google's going to be a winner. I think Google has earnings in about like 20 days, something like that. Earnings season is starting next week or in 2 weeks. So we are going to have a lot to cover. It hasn't been earnings season since August. So we've had about a month and a half of relaxing, but it's going to be time. Mid-October till pretty much end of November. We've got a lot of companies. Sofi on October 30th. Palantir are going to be like early November. I think Robinhood is going to be in end of October as well. So a lot of companies will start reporting. Google right now at $135, 1.72 trillion. It makes sense why Bill Ackman also loaded the crap out of Google. I mean, he sees them as the actual play that's going to be taking advantage of AI from a hardware and software perspective. And again, $72 billion last quarter, $9,000 a second they did just in advertising. So that ads moat is likely not going away, which means anything they build on top of that is just going to be a cherry on top in regards to where they're able to go. So exciting news for Google. And I think this AI device is just another update in terms of how they're going to be able to keep going from there. Matt brings up PayPal. Let's discuss PayPal. And also in the chat, please let me know if you have PayPal stock. I think a lot of you have it, but I just want to make sure that this chat actually is on the PayPal train along with myself. We got a PayPal upgrade, okay? We got a PayPal upgrade yesterday, which was really great for the stock. PayPal upgrade is $126. Pretty big upgrade. And so here's the upgrade from Morgan Stanley. No, 150 shares, 2025 leaps. Yes, a lot. Hell no. Inbounds, like if it's not Tesla, I don't have it. Yes, some PayPal. Imnop's got it. John's got it. Gary's got it. Bohan's got it. Or Bo Don. I'm sorry if I said that wrong. No PayPal. Okay, so a lot of you guys got it. A lot of you guys don't. Here's the price target upgrade we got yesterday. Morgan Stanley. James Fawcett. Dude, James Fawcett must have got so wet after that price target because he turned on the faucet. $126 for PayPal after the company announced its credit and debit cards, including the Venmo credit debit card, will be available to add Apple Wallet and be used to make tap payments using an Apple iPhone or Watch. Basically, Apple Pay will now let you incorporate PayPal into Apple Pay itself, which is really interesting because I use Apple Pay a lot and I always use Robinhood to pay because I just like, you know, it's convenient for me. If I can pay through PayPal via Apple Wallet, that really is a game changer. I mean, that that I think helps a lot of people that like using PayPal. The analyst commented, "We think the news should be a modest relief to investors as concerns around share loss to PayPal has been a key debate around PayPal amid Apple Pay's faster growth and heavier usage among young consumers. We've consistently said that PayPal will eventually need to find ways to integrate its payment ecosystem within the Apple ecosystem in order to address these concerns long term, especially given Apple's unique hardware tech advantage with payments. Obviously, Apple having distribution. As we laid out in our AlphaWise Digital Wallet Consumer Survey report, we think levering more partnerships should be a key strategy pursued by fintech and payment players to quickly expand availability and functionality while focusing investments on core capabilities. So now on Apple Pay, you'll have a little PayPal button come up, a little PayPal card, and you can pay for your Dunkin' Donuts via PayPal versus via your other card. The company that controls the distribution ultimately controls the ability for the software to get access to the fee that they'll make off of the payments, whether it's Cash App, Robinhood, Sofi, whatever it is. And so I was surprised PayPal wasn't available on Apple Pay. I mean, that's like the fact that it wasn't happening. I was surprised that's even news. But 126, that's look, the stock's at 58. That's some pretty decent upside that analysts are seeing, and it'll be really nice in a year if the stock's even at 90. If it was one of those obvious bottoms at 57, and a lot of people get advantage over it. I doubled down on my PayPal, not double down, but I bought a little bit more PayPal, about $600 worth of it. Nothing crazy. What is it? 2 days ago. So now between my Roth and my regular portfolio, I think I have close to. Let me just do the math. Close to $9,000 worth of exposure to PayPal. So I mean, for me, that's a decent amount. For you, it might not matter too much, but that is a decent amount for my portfolio. Is the guy accurate? Yeah, I mean, I believe he is accurate on this note around PayPal. Now, I don't know how he got to 126. I have to go deeper into that, but his big catalyst was this integration with Apple Pay, which is really important for them. Okay, we got some breaking news in the chat. Let me pull this up real quick. Apparently, here you go. We got another one that bites the dust for Tesla. Hyundai Motor to adopt Tesla EV charging standard. Let's put that up real quick. Let's see what we get. Yep, there we go. 1 hour ago, this just broke. Hyundai Motors is now going to adopt Tesla EV charging standards. One by one, they all fall back into Big Daddy Tesla. The latest automaker to join Elon Musk's EV South charging party is from South Korea. No word whether Hyundai's sibling company Kia will also take on Tesla's plug. Another major automaker is jumping on the Tesla bandwagon. Hyundai today announced its plan to adopt the North American charging standard, aka the Tesla plug, for its future electric devices. Hyundai models capable or compatible with Tesla's NACS plug will start arriving in the fourth quarter of 2024. In the first quarter of 2025, the automaker can provide adapters to its current customers so they can access Tesla supercharger stations. Hyundai's current EV lineup, which includes the Ioniq 5 and Ioniq 6, have both charging ports that are compatible with the charging standard. Ford, GM, Rivian, Volvo, Polestar, Nissan, Mercedes-Benz, Jaguar, and Fisker. All of these guys are on Tesla, so the only holdouts are Volkswagen and Toyota. Interesting. Volkswagen and Toyota are the only ones that have said no yet. The rest are going into Tesla. DRK says, why did they take so long? Another one heals the king. This is really incredible, bro. It's just crazy to see these guys like have to bow down because if Tesla has the most superchargers, if they have the most vertically integrated ecosystems where customers can actually get their charging done and move on with their day, if they have the best way to get rid of range anxiety, given they have the most networks, it's like you kind of have to use them. If you're going to buy an EV from any of these manufacturers and you can't reliably find a charging station, there's no way you can survive with an EV. It's just not possible. It's not happening. So pretty good news from that perspective. Tesla's supercharging network is widely recognized as superior to many of the third-party EV charging stations. The company has 45,000 worldwide. 12,000 are in the United States. How many gas stations are in the U.S.? Let me check that. How many gas stations are in the U.S.? So Tesla has 12,000. The gas station, there's 145,000 gas stations. Okay. So obviously there's a lot more gas stations than EV stations, but there's a lot more people that have ICE vehicles than they have EV vehicles. So 12,000 in the context of the amount of people that own EVs, that's not a bad idea as well. That's not bad at all as well. All right. Can't wait for FSD to get. Yeah, I mean, that's going to be the money printer when FSD starts getting adopted. All right, so not bad on Tesla. And again, Tesla rose a nice 6% yesterday, so we'll see if that rally can sustain itself or if it sells off. But very nice news for Tesla. Let's go into a clip I wanted to show. This was a great clip on CNBC today on how the bond market is reacting to everything going on and what will have to break for bonds to top in terms of their yields, equities to quickly bottom, which is what the guest says is going to happen, and then eventually for the market to rise. He's very bullish on the stock market. He just thinks a couple things need to happen in order to get there. So let's take a look at this.
Pull back from multi-year highs following weaker than expected jobs data. Uncertainty still remains over what the Fed's next move might be in its fight against inflation. Our next guest says the bond market could be having a panic attack. Camille Srikumar is the president of Srikumar Global Strategies. He joins us to explain the panic attack. Is it here? Is this the panic attack, or is there a lot more panic to come?
Andrew, this is clearly a panic attack. Whether there is more to come or not, it's not clear. And the reason is, it all happened suddenly. There was no new development. The fiscal deficit has always been high. On top of that, we have had pressure from inflation. And so it is not as if the bond market has some new information. But the panic attack came, I believe, because they essentially found that the Fed was not responding to the increase in interest rates. There was no statement being made. And suddenly they piled upon each other to sell the bonds, and it pushed the yield up. But that brings its own end, Andrew, after a period of time, because this is going to cause a shock, like I've been talking on your program, a credit event. And my particular target is the banking sector. You're going to see more deposits flow out of regional banks. For instance, today on 6-month Treasury bills, you can get 5.6%. So there is no reason why you should be keeping your money in a regional bank at half that level. So that's going to happen. The second is you're going to have the banks cut back on their lending as a result of all of the regulatory checks. So I think if you ask me what is the absolute peak right now, Andrew, I would probably say 5%, but I doubt we'll even get there.
But what do you think, if something is to break, what is it first? The regional banks?
I have a few favorite candidates. Regional banks is the top candidate that I have, a repeat of the March crisis, but much worse than it was in March. Second, it spreads to some of the larger banks. You see that the larger bank share prices have been under pressure. They are also suffering from an outflow of funds. This another culprit that I have in mind is what happens with the pension funds. Remember the UK pension funds in September of last year, when interest rates shot up on the bond yields, they all had massive losses. So if that happens, you're going to have public pension funds in the United States lose money. They have to go to the treasurers of different states asking for higher taxes or reducing the benefits of employees. That is not acceptable. That, again, is a second way of doing it. Third shock, the commercial real estate crisis, which we have been talking about, is likely to get even worse.
Basically, he's listing all the things that have to break before things go up, but he doesn't think those breaks last for a long time. He thinks it happens quickly, the Fed reacts, lowers cuts, and then stock market starts going up.
With the fact that the bond yields are much higher, and along with it, the various interest rates are going to rise as well.
Okay, you've just told us everything bad that could happen. Is there a scenario in which you think what's just taken place even over the last 48 hours or the last week somehow reverses itself in short order?
You asked for good news, Andrew. I can give you good news, but that is not a reversal by itself. The good news comes because anything like a credit event will cause the Federal Reserve to shift. Stop increasing interest rates and perhaps switch over to quantitative easing. They switched to quantitative easing in March when the banking crisis came. And remember, we talk about the 10-year yield being as high as it was in 2007, and we know what happened that year. That caused a great financial crisis to begin. So all of those will cause.
You just told me you were going to tell me good news, Sri. What's the good news in that?
That is the good. That is the good news. You have a rally in bonds and you have a rally in equities as the Fed comes to the rescue and inflation comes down as well. But then something has.
Basically, he's like, when shit hits the fan, the Fed will cut rates and then stocks will rally. Kind of like how in March 2020, this whole went down, but there will be some short-term pain.
To break in the system before you get the good news.
But the good news that you're talking about is something that's going to push the market down. Like to this point, every time yields go up, the stock market drops, equities drop because there are concerns about higher interest rates. Under the scenario that you're describing, interest rates would come down, but it wouldn't be for a reason that the market would probably like. It would probably put pressure on stocks at the same time. So that's your definition of the good news?
It would put pressure on stocks in the short term, Becky, but if you have the interest rates come down, and if the markets realize that Fed is on their side now rather than fighting inflation, that is going to help equities. Think about March of 2009. We had, again, interest rates come down from December 2008 for the first 2 or 3 months of 2009. March 2009, March 9th, was the bottom for the S&P 500 index. And thereafter, we had a rally taking place in equities. So that is what a credit event can do for you.
So, I mean, look, he's not wrong about that, given what he's talking about that happened in 2009. We had interest rates cuts. We had cuts on interest rates for 3 months. We capitulated into a bottom, and then finally we got into a rally. His basic point, which is kind of contrary to the soft landing folks, is that there needs to be a little bit more of a hard landing, but the hard landing doesn't last for as long as it is. It's like, it's hard for like a couple of minutes, you know, it's not hard forever. And then, but during those couple of minutes, it's really bad, right? Like shit hits the fan. And then eventually the market decides to move forward from there because the Fed has to cut rates. And so the cutting of the rates is really going to be his catalyst. But that catalyst, he thinks, in order for that to happen, needs something to break in the economy, whether that's the regional banks, whether that's a credit scenario, whatever it may be. I personally, I don't know, man. The people that are saying it's the regional banks, I get the argument. The problem is, I don't know if this is March 2023, where you have some of these regional banks that are so mismanaged that they're going to just collapse. Remember, Silicon Valley Bank and Credit Suisse were horribly mismanaged. A lot of these regional banks, we kind of know what their problems are. I mean, Bank of America, out of anything, should be one of the biggest candidates to theoretically collapse, right? In terms of like all the losses they have, but they're not going to, because there's too much special interest holding up Bank of America. Warren Buffett owns a Bank of America. They can withstand the losses for long enough. And eventually, if inflation comes down, there doesn't need to be a credit event. There doesn't need to be a bank run. You know, his argument is like everyone's taking their money out of the banks because they're going to get more money in a treasury fund. Like, deposits are decreasing, but they're not decreasing to the point where there's a bank run. The reason there was a bank run on Silicon Valley is because everyone in the tech space said this company is going to run on Twitter. Like, you had Peter Thiel taking money from Founders Fund out of Silicon Valley Bank. That's what triggered a bank run. I don't know if there's a bank run on Bank of America, bro. Like, it's just hard for me to imagine that happens. And so the whole bank collapse scenario, I think it is possible. But I think if inflation comes down and interest rates come down, then those losses on their portfolio in terms of the loans don't get as bad as we want it to be, and then the banks will be fine. And so I don't think the banking scenario is the one that we have to think of is going to be the worst. If regional banks collapse, say goodbye to small businesses. Yeah, and look, this is a great point. A lot of small businesses, they bank with regionals. They put their money into regional banks, right? Into local mom and pop shops. They don't bank with Sofi. And so if that's the case, like, where are they going to take their money? Where's the local laundromat going to take its money out of the regional bank? Where are they going to put it? Like, they're going to leave it in the bank, right? They're not putting it in the laundromat making $10,000 a month in revenue that has $8,000 of expenses is not going to put their $2,000 into a money market fund. That's just not going to happen. And so from that perspective, I think deposits on the regionals are not necessarily in worry, but we do need to lower interest rates to get some of this stuff to keep good. Keep that Aldia money safe. Yeah, our money is at Bank of America. So if Bank of America collapses, I guess, but granted, we are FDIC insured, so we should be fine. And again, a lot of also, Robinhood and Sofi giving you $2 million of FDIC insurance. That's also putting some pressure on the big banks because you don't even get $2 million of FDIC insurance in JP Morgan or Bank of America, and Robinhood's giving you that. So, that's another reason for why some of the banks are losing a little bit of deposits. Still in Truist. Yes, I am in Truist. I think Truist is incredibly undervalued. If you just go to read some, I don't want to do a whole segment on it, but if you just go to Seeking Alpha and you read a couple of articles on Truist, some really smart people did like very big deep dives on it, and it makes a lot of sense. It's going to take some time for it to recover, but it's one of those recovery plays that I think could do really well. They're doing $750 million in cost cutting throughout 2024. That's almost $1 billion of cost cutting. So when you've got a bank that's being that fiscally responsible in terms of the costs they want to cut, and along with their insurance business that they can sell off to continue getting a premium, they're going to be fine. It's just a question of the market end up realizing it. If they hit $25, they're going to be at an 11-year low. Right now, they're at 27. So we'll see, where they go from there. And you're getting a 7% dividend, which is just insane, to wait for Truist. Like, I think Truist is so stupidly valued right now. They're the 7th largest bank in the United States of America, being treated like they're the next Silicon Valley bank. I don't see it. But if there was going to be a bank run, I do not think it would be on Truist, along with the fact that 55% of small businesses bank with Truist. Now, granted, you should do your DD before you get into Truist, because I don't lose sleep at night over Truist. If you invest in a bank right now and you see some of the headlines, you will definitely lose your sleep if you don't have full conviction on that bank. I don't care if it's Bank of America, Truist, whatever it may be. You really have to have conviction to invest in a bank right now. But it is a little bit more risk you're taking for higher upside if the bank recovers, because a lot of these banks are trading at just ridiculous levels at this point. Bay Ray says, Amit, this month Hood is adding another bank to their cash free program, which will make the FDIC insurance $2.25 million. See, that's amazing. Remember, what Robinhood does is they partner with a network of banks, and they use technology to be able to give the consumer the opportunity to not only get that 4.9% yield on their cash, but also to have this FDIC insurance of $2.25 million, up from $2 million. So instead of partnering with one bank, they partner with many banks. So that's a really, really good benefit in the context of what Robinhood is doing. And that's why they're able to provide their benefits a lot of value as well. Robinhood, another one I also think is undervalued, man. I mean, $7 billion in cash, $3 billion for the brokerage. Market cap is $8.8 billion. So let's just call it $9 billion. 7 out of the $9 billion you are paying for Robinhood, you are buying cash. Like, it's stupid. The other $2 billion is the brokerage that, by the way, is now GAAP profitable. It's stupid. It's absolutely dumb. And so, look, let's see if Robinhood ends up being what I think Robinhood can be 15 very easily by the end of next year, but we'll see. It's at $10 right now. Let's see where it ends up getting there. What do you make of Eddie selling SoFi? Do you know why he sold SoFi? Is there any reason? Let me go on his Twitter. Is there a reason why he sold SoFi? Oh, here we go. All right, let's do this. So people may not know who he is, but he is one of our FinTwit buddies. Let's give his reasoning for why he sold SoFi. Let's get a little bit of a bear case here on SoFi. I got 7 minutes until the market open. Let's see why Eddie, who is someone on Twitter, sold SoFi. Okay, let's see his reasoning. It's always good to see this. Oh, I thought he was gonna have a huge thread. It's just like 3 sentences. Okay. I'm going to get a lot of pushback, but I want to be transparent. Sold my SoFi around $8. Purchase price was $5.50, and added nuance to the SoFi story, unaware of capital ratios. SoFi is still the best positioned bank, in my opinion, but is not a slam dunk, I thought. Okay. So that's interesting. I think, okay. So the capital ratios is actually a weird concern to sell it for. I don't know why you would sell it for capital ratios. Banking IP, this is an account that, quite frankly, they spread a lot of FUD. I mean, I respect their research, but in regards to SoFi, they're fucking stupid. I'm sorry. They just spread a lot of bullshit around SoFi. Now, I respect them, but I can also say it's bullshit because a lot of it is not well researched, in my opinion. A lot of it is just their ideological concerns around SoFi as a bank. A lot of what Banking IP is saying is saying what Chris was saying back in November of 2022 when Chris was ultra bearish. Chris changed his mind because the data was pretty obvious. And this guy seems to have not done that. So Crossroads says, I'm adding to SoFi here, but you made a profit, so congrats. It's pretty darn close to a slam dunk. Still in cash or buying, or he's in cash. Data said, you read my article yesterday about capital ratios. I did. It doesn't change my stance. I bought while misunderstanding the bull thesis. SoFi can do well, but deposits don't guarantee their success like I originally thought. Matt says, I'm trying to understand. You're concerned about SET levels. Got it. Does that mean if the price got down to 4 or 5, you would start accumulating? Okay. I mean, whatever. I guess capital ratios, I guess if that's a concern, I don't think that's the biggest concern, man. The problem with Eddie as well is the dude had Palantir and he sold out of it at 11. He was like the next big Palantir bull, started a whole YouTube channel for Palantir. Then he sold at 11. Then he started getting into Sofi. Now you sell at $7, $8. I don't know, man. Look, does SoFi have some headwinds? Sure. Do they have more tailwinds than headwinds? Absolutely. Especially with student loans restarting, member growth being at an all-time high, a couple quarters away from GAAP profitability. I don't know if that's the reason you sell the stock. That's a tough decision in my position to just get rid of it at that point. He can't handle the pressure of that many shares. Yeah, I guess. Look, to each their own. Everyone has to make their own decision. You got to do what you got to do. If SoFi ran up to like $10, $11, I totally wouldn't shame anybody in selling. Palantir was at 1680 last week, and I said, look, if you take your profits, you take your profits. If you got to take them, you got to take them. But I don't know. At $8, capital ratios is what you're concerned about. See, the thing is, what's his name? Noto addressed this stuff as well in the latest conference. He talked about this explicitly. I don't know. That's a hard reason for me to justify selling it. But it is what it is. That's why this is a market. Someone sells, someone buys. The shares he sold at $8, someone bought them, and hopefully that person will be able to sell them at a little bit higher. We'll see. I'd be pretty surprised if SoFi didn't break 10 again following earnings. Yeah, I mean, that's what I'm looking for. I think SoFi is going to, unfortunately, I won't be able to cover it. I'm going to be in Vegas October 30th. So Tanner is going to have the SoFi live stream to himself. So definitely everyone make sure you watch Tanner that day. But I think SoFi is going to have a monster Q3, man. I think SoFi is going to do well. They're going to kill it. And from that Q3, I think they're going to be really well positioned to, if we get an end of the year rally, SoFi will participate in it. And SoFi is going to do well just based on the fact that the market, if it in general is doing well, it'll be good. And if SoFi puts up good Q3, it'll do well. What I expect from Q3 is not GAAP profitability. 2 minutes till the market open. I think we will get probably around, look, I don't know if we beat on members from last quarter, but I think at minimum we're getting 500,000 members. SoFi has been in the top 30 on the iOS app charts for the past 3 months. So you get a minimum of 500,000 members, probably 1.5 or close to $1 billion of student loan originations, maybe adjusted guidance on EBITDA, even though they already raised guidance on that last quarter. Revenue probably close to around 480 to 490 million, if not around 500 million. And Galileo is going to pick up. Tech services are going to they're just going to show increased growth everywhere. It's not going to be like a quarter where I think there's any real downsides because there's no catalyst. And on top of that, this is not me just hypothesizing this. Noto was at the Barclays conference 3 weeks ago, and he said, yeah, Q3 is on track to be everything we said Q3 is going to be, which means we're expecting probably another $2 billion in deposits as well. And those deposits are coming at the behest of a JP Morgan and Bank of America, where people would rather get 4.5% on their cash in a SoFi without having to hurt their equity, without having to hurt their margins that SoFi is getting to give that return for customer acquisition. So I think SoFi is going to be fine. I just don't think it's... See, and this is the worst thing about selling. This is when retail tends to sell, When retail tends to sell, that's when it's annoying. Because we talked about this on Finance Show, because this is not the fucking time to sell. This is the time to buy. This is the time to actually create a little bit of generational wealth. It's not, buying SoFi at $10 was great after it was up 100%. Buying SoFi at 747, it's a way better deal, but this is where people get scared, and this is where institutions come in and they gobble it all up. And so I guess it takes some time to mentally get to that point, but it's weird selling SoFi right now at this point. Bay Ray says, Amit, thanks for doing these extended market opens. I've been getting up earlier and doing cardio while I watch this every morning. Yeah, these also force me to wake up every morning as well. So I love waking up around 5:30 a.m. and getting prepared for the day, doing enough research so I'm ready to go for the market open. So thank you for being here. Everyone, 589 people, thank you for being here. And it's exciting. We got 15 seconds until the market opens. The catalysts today are some job reports, 10 years coming down. S&P is basically flat on the pre-market. A lot of stocks are red, very little, some of them green. We'll see how the market reacts, and we'll see where things go. October 5th, 2023, another day, another dollar. We are here. We are alive. 9:30 a.m. It's time to see what the stock market does. Wake your ass up. The stock market is officially open today. Thank you all for being here. Let's get into it. S&P 500, 424 opening up just a little bit below yesterday, pretty much in the right place. So 424, basically flat, down 0.03% on the S&P. Not bad at all. Let's get into Sofi. Sofi, $7.42, down 0.67%. Google, 136, up down 0.14% after introducing the Pixel Pro yesterday. Not bad at all. Amazon, 126.47, down 0.44, continuing to deal with some of these FTC lawsuits. Probably not going to be an end in sight for the next couple of months for Amazon in this lawsuit, but still at 126. Palantir, 1560, down 0.79%. Palantir, the favorite to get the NHS deal. I wanted to upload my NHS video yesterday, and I tried recording it twice, and both times my software just bugged out. Like after the second time, I was like, all right, I have to go to the dentist. I can't do this anymore, so I couldn't record it. So that video will be coming out in a couple hours. I recorded half of it yesterday. The other half got corrupted by the file. I wanted to get it out. I'm sorry about that, but it will be out today, and I'll be doing some analysis on this NHS deal. Yahoo Finance also covered the NHS deal yesterday, so it wasn't just Bloomberg. We're getting some other media sources picking up this deal. It seems like we got this freaking deal, and it's going to be pretty amazing to see us get the deal when it's officially announced. Microsoft at 318, Verizon at 31, Bank of America 2580. Bank of America hitting some pretty bad lows, 52-week low. Bank of America, I think fair value is around 34-ish. So there is some equity appreciation there. If you want to take a risk on Bank of America, I have to do some deeper DD, but they have a lot of billions, talking hundreds of billions of losses on their portfolio because of interest rates. So it's got to come down, but you got Daddy Buffett supporting you. So it would be really interesting to see if Buffett ups his stake at these prices because he knows that when interest rates come down, Bank of America will be fine, or if he does a little bit of selling. I don't think Warren is selling, but I do think it would be interesting if he starts buying. Snowflake at 154, Coinbase 73, and Novix $10.13, down 1%. Truist 27.11. Truist had a rough day yesterday, around 26.90 or 85. So Truist right now at 27.11. Enphase at 117, breaking out of that $114 range. Tesla 260, continuing momentum. If you're just joining, Hyundai in South Korea has officially adopted the charging standard for Tesla. So they are now the 15th auto manufacturer to bite the bullet for Tesla, and so they will be using the superchargers by early 2025. For Tesla. Toyota and Volkswagen are the only ones that have not adopted it yet. Bitcoin is rising. We got Bitcoin at, what do we have? Bitcoin at 28,000. There you go. Look at that. Nice little green candle right there. Early on in the morning, Bitcoin 28,000, up from 27,569. Wow, look at that. Within an hour, within about 30 minutes, it was at 27.5 just 30 minutes ago. So nice little pop on Bitcoin. That's why I'm seeing a little bit of pop on Coinbase as well. C3 AI, we haven't looked at this stock in a while. 23.93. That one's down pretty badly, down in that $20 range. It was at $40 at one point. So C3 AI coming down a little bit. Their last earnings were not that spectacular. Palantir 1561, Microsoft 317, Google 135. Let's check on Duolingo. I want to see that one. Duolingo 162. Duolingo continuing to do well. Celsius, I had some people commenting yesterday on YouTube about Celsius. It's at 155 now. I think it deserves a deep dive. I'll tell Chris about it. We'll go a little more deeper into it. It's a nice haircut from the $200 range. The problem is, again, it's up still from $4 in 2020. So I just don't know how much more capital appreciation is left for a company like Celsius. But we will. I mean, look, it has a nice haircut when it fell from 200. So we'll take a deeper look at Celsius and see if there's any juice left in that stock as well. I always say Hyundai wrong. I'm sorry. I'm still saying it wrong. Hyundai. I'm sorry. I always say it wrong. I say it wrong so many times. But yeah, that is what we're seeing right now in the market open. Hope your sister bought back into SoFi with her profits. No, I gave my sister her 12 grand and she put it in Bank of America. That's what my sister did with the 12 grand I made her on SoFi. So for those that don't know, my sister gave me 12 grand in May, put it into some SoFi options, turned it into 25 grand, gave her her profit, and she put it in Bank of America. And I told her, hey, can you at least put it into SoFi and get 5%, 4.5%? And she was like, nope, I'm just putting it in Bank of America. So that's like, you can't do anything with people that don't want to listen. I tried, bro. I really tried. I still have her other, what's now is 9,000 in my Robinhood. And I hopefully will get to turn it into 30,000 over the next year and give it back to her. But you can't fix someone that doesn't care. She just doesn't care. There's nothing I could do about it. All right, let's get an update on the auto workers strike as well. That one has a heavy impact on inflation. Let's see if they're getting close to any deal on that one.
Equipment and Manufacturing Association, known as MEMA, MEMA, is the leading trade group for vehicle suppliers, and it has a new survey out detailing the impact of the UAW strike. A couple of key takeaways, or takeaways. Nearly 30% of the surveyed suppliers laid off employees. 60% expect to begin layoffs as soon as next week. Vehicle suppliers employ more than 900,000 workers, 6 times more than the UAW workers. Joining us now is MEMA President and CEO Julie Freeman. We heard what may be some positive news this morning, Julie. What are you hearing about whether this does? We just heard what would happen if it goes a certain amount of time, and things could get significantly worse in terms of your group with layoffs, et cetera. Is there some progress being made, are you hearing?
Well, we do see some back and forth occurring. So that is positive news. But the challenges still exist in terms of the fiscal capability of suppliers. We are very worried about their ability to sustain during this time period.
And what is the, would you say, the drop dead date? When does it really get serious? How long?
It's hard to predict because we don't know exactly week by week what's going to happen in terms of additional strike targets. But I would say if we get to mid-October, we're going to see the suppliers in a very difficult situation.
In the context of the UAW, one of the things that's also really important to understand is that they have proposed a couple of new negotiations. Last week, the auto workers were not even coming to the negotiations. Now that has changed. They are talking to the negotiators a lot more, meaning like they're coming to the table and they're having a little bit more of a discussion. The problem is that they're losing about $200 million, GM in particular, almost every month by not having these cars in production. And what that's really hurting is the downstream effect for the suppliers of the vehicles if they're not making anything. A lot of those suppliers are going to end up having to lay off a lot of workers. So what's really going on right now is not even affecting the big car companies as much because they can weather the storm, but it's the auto workers or the suppliers for those OEMs that are taking the bigger hit. I think 500 just got laid off 2 days ago at another OEM supplier. I'm forgetting the name of it, but those are the people that are really tough, right? Because if the cars aren't being made, the suppliers have to lay off people just to be able to deal with costs. And it looks like we're at least a couple weeks away until we get to a deal, even though there are improvements in the negotiations that were not happening a couple of months ago. So, hopefully we see a little bit of momentum there. Let's go to GM and Ford as well, actually. So GM right now, their stock. Oh, by the way, GM's CTO left. GM's chief technology officer left the company. $30.90 down 0.52%. I don't know why the CTO left, but he left. Apparently it was one of Mari Bala's, who's the CEO's picks, but he left. Let's look at Ford. Ford is also down a little bit, 0.69%. Tesla, on the other hand, doing phenomenally well. Green, 262, just absolute strength by Tesla all around. Seeing Tesla do well. Not bad at all for Tesla. Obviously, those auto worker strikes are just like horrible for Tesla. So, I mean, they're amazing for Tesla, horrible for the auto legacy manufacturers, because at the end of the day, you've got Tesla benefiting off the fact that their workers are making cars, and their workers are making cars and getting stock options, and they're happy to be making their cars. Okay, let's get an update on oil and a little bit more on why oil is declining. We've got oil now at $82, WTI crude, 85 on Brent crude, which is really nice. Let's get an update on where that's going from there.
Prices tumbling more than $5 a barrel on Wednesday on demand concerns about worries about a slowing economy. Now, WTI is down now more than 10% after hitting a 13-month high just last week. Joining us right now is Halima Croft, RBC Capital Markets Global Head of Commodity Strategy and a CNBC contributor. Energy and the energy patch was the place to be. And, well, I guess the big question is it still?
And look, that's a week ago, people were putting all their money from tech into energy. They thought oil was going to 120 a barrel, and now it seems like it's one of the worst trades you could be in.
I mean, certainly concerns about the broader macro backdrop are really hurting oil. I mean, Jay Powell, rate hikes have continued to be a persistent problem from OPEC, but adding to the worries yesterday was a very large gasoline build in the United States. So oil is having a very tough moment. I think the interesting question is, do we see a potential response mechanism from OPEC? Because they don't want to sit back and let a macro storm drag oil really far down.
So that's the question. What do you think the answer is?
I mean, look, I think OPEC is a different OPEC than 2015. In 2015, they basically sat back, were very passive, basically saying, we're going to see if shale breaks first. And they basically carried into the 30s. I can tell you the lesson from Saudi Arabia is you get in front of these type of sell-offs. So I would anticipate if we continue to see selling pressure over the next few days, if this looks like it's going to be, a sharp sell-off, potentially plunging into the 70s, I think we'll at least start to hear very clear statements from OPEC about potentially coming back in.
But is that the way you're handicapping this? Are we now moving back into the 70s? I mean, look, 3 weeks ago, we had people coming on this broadcast saying it was a straight shot to $100.
I mean, again, I think we just have to watch the coming days. Again, I think the fundamental backdrop for oil, despite the gasoline build yesterday, I think it remains strong. I mean, we did have crude, draws yesterday. I think gasoline is a particular problem. Refineries have been running very hard to produce distillates, and gasoline is a byproduct of that. So we've had this gasoline surplus. But again, the question is, do you have a macro storm that can bring oil in a place that fundamentals would not necessarily dictate?
Well, that's the question. Do you think that we are about to enter a demand problem?
I mean, again,
right? This is what Jay Powell might even want, even though I know he doesn't like to include, energy in his calculation, but that might be part of this.
I mean, certainly I would say that fear of Powell has been a real drag on the market this year. Now, if you look at demand overall, remember the China worry, China demand is going to be terrible. The numbers from China have been strong this year. So demand has been better than you would believe because of the macro stories. I do think this gasoline number, though, is causing concern. And that's why I would say the next thing to watch for if the selling pressure continues would be statements from OPEC about a willingness to come back into this market.
Okay.
Yo, and that's this is the thing, right? When OPEC left, their idea was they're going to run up the oil prices and they're going to make a shitload of money. If gas prices are coming down, OPEC doesn't get any benefit from gas at $82 a barrel. They get the benefit if it's at 95 to 100. So if we get gas at 82, they're losing money because they could be pumping more into the system. And obviously that could be, making more money for them in the context of quantity versus the magnitude of the price they can make per barrel. And they'll come back in, and that'll increase increase supply and decrease prices even more in the context of oil. So I think a lot of the concerns we had last week about oil at 95 and a lot of people starting to buy up oil futures and buy Shell and BP and Exxon and all this shit, it seemed like a bit too fast. I didn't even feel that oil was getting to that point where it was like a buy or something, because the catalyst didn't exist for oil to keep going higher and higher and higher. You knew at some point it was going to stabilize and we were going to get to a better situation. And now at 82, as long as we don't get back to that level, October's inflation report might be really good for CPI. September, unfortunately, will still include, this is going to be the problem. September CPI is going to include gas being incredibly high because it was September. And the problem is that might dictate the rate hike. But October and November seems to be much lower. And so maybe the Fed will recognize that and wait a little bit longer. But oil has come down, and it does not seem like it's going to rebound to that high level because the catalysts just aren't there. Gas is cheaper in Mexico. That is true. Gasoline price in Saudi Arabia remain unchanged at 62 cents a liter. Yeah, see, exactly. That's a core thing. OPEC is the boot that pushes your head underwater when you're gas looking for air, waiting for you to hold your wallet up. Yeah, and if they're not making more money, they're going to pump more oil into the system because they got to get their money off the quantity of gallons. So I would imagine that'll be a little bit better. SoFi down about 2% today. S&P 500, 423, not doing that bad. S&P 500 just down slightly. Where's the NASDAQ? NASDAQ, 13,100, 13,200. Okay, down 31 points. Amazon's down. Palantir's down 1560. Microsoft's down. We do have red. There's a ton of red, but the red is not intense red. It's like 1%, 1.2, 0.9, 0.8%. Robinhood down about 2%. Nothing too crazy. Regional banking ETF also at 40.20. If I had to guess, I would say the end of the year is going to be better than what most people are expecting. I just don't know what the catalysts are to have some massive collapse in the S&P 500. Remember, Mike Wilson, JP Morgan chief strategy or chief equity analyst, he did a great podcast in August where he said, look, I think in October or September, the S&P falls back to 420. And he had some weird logic. We're not going to get into what his logic was, but his point was there's a shot clock. The name of the podcast was called Shot Clock on the stock market. And we got like 24 seconds in a traditional shot clock to see if the S&P can get back to these 4,200 levels. He missed the run up from, I think, 3,600 in January to 4,600 in July. And a lot of his analysts were pretty pissed off. I mean, a lot of his clients were pretty pissed off at him that he missed the run up. But his argument was like, look, we'll get another chance at 420. Now it's here. We're at 420, 423. We are here. And so my question is, are people like Mike Wilson that manage JP Morgan's kind of premier equity clients that told clients to sit out, made Tom Lee look like a genius and him look like an idiot? Does he finally bite the bullet? He said he was waiting for 4,200. We're at 4,200. He manages tens of billions of dollars. Does he tell his clients it's time to put money back in? Because if you don't get back in the market and you get even, I would say, greedier for better prices, unless you have some fundamental logic for why prices need to get back to, 400 on the S&P or 3,900 on the S&P, you're probably going to miss another rally. And so I think someone like Mike Wilson is smart enough. I would argue Mike Wilson is taking his clients' money, especially because he pretty much failed his clients this entire year, and he's dumping it into equities because he doesn't want to miss the next run up from at least 420 to 470 on the S&P. That would be my hypothesis based on what he said. And so if some of these institutions are doing that, maybe, the end of the year rally is not going to be as bad as we think it could be. Haven't noticed my fuel getting cheaper here in the UK. Yeah, in the UK, I don't know what's going on in the UK. You guys have a whole different type of inflation going on. But, nonetheless, hopefully it's going to get better, at least as it's getting in the United States. Let's get an update on Apple as well and get a little bit of a update on if Apple deserves to get a premium or if it doesn't.
You don't see Apple downgraded very much, especially by somebody who's been bullish, like this analyst has been. What do you make of the call?
I think the research report, there's a couple of good points. What we agree with is the iPhone 15 would probably just be more of a modest driver in earnings growth for 2024. What we disagree with is we don't think Apple is necessarily trading at a premium valuation. In fact, it's about one standard deviation away from average over the last 10 years in terms of its multiples. We've seen the shares trade much higher. In fact, 2 standard deviations, 3 standard deviations above historical average. And frankly, we think the higher multiples may be warranted since the company's pivoting to more of the services business. So some good points, but overall, we disagree with the research note.
I mean, I think there are many who would suggest that they're not sure that Apple deserves a 28 times forward PE. That's well higher than its historical average. How do we justify it when we know that we've been in an environment, at least, where revenue growth has been consistently slower?
Yeah, I think you justify it with the fact that the services business is a growing part of Apple's hardware business. I think this year, it's a little harder to justify given that Apple's earnings, to be honest, this year is kind of modest. But looking into 2024 and 2025, you're actually seeing a little bit of an acceleration in earnings growth.
So that's going to be contingent on services. We kind of all know that story there. And, if Apple can ramp up their services, they'll be fine. Again, I did get my new iPhone 15 Pro Max. I'm loving it. It feels pretty awesome. Enjoying it a lot. It's very fast. I don't know if Apple sold enough of these to make a big dent in their next earnings, but I like it, and it's working well for me. All right, let's end off here on a note on Palantir. We got a new analyst note on Palantir from William Blair. This dude hates Palantir for some reason. I mean, I don't know if he hates it, but he definitely doesn't like it. So here's what he said. William Blair assumes that Palantir's new UK contract is already reflected in the guidance. So he thinks the NHS $580 million does not matter. He sees significant downside to Palantir shares. Palantir is 103 times free cash flow multiple represents considerable downside risk with peers trading at multiples in the lows 30. Louis DePaula. William Blair is the name of the institution. Louis DePalma is the actual analyst. Then Arnie put right here, isn't this guy tired of looking dumb? So William Blair said the same thing in November of 2022. Palantir dips as William Blair incrementally negative after rally startup bankruptcy. So when Palantir was $8, William Blair did not like Palantir. I mean, and this is honestly, some of this shit got to me. I was reading some of this stuff and I was even triggering or stopping me from buying as much as I wanted to buy because all these analysts just kept saying we hate Palantir at $8, $9. Obviously, AIP wasn't around during that time, so things have changed. But those headlines were pretty tough back in those November days, and I was still buying. I was looking at my buy orders yesterday. I was still buying, but I could have been buying even more aggressively. But it was tough back then with those headlines. Now at 15, the guy must hate Palantir. Now the guy must just absolutely hate Palantir at this level. See, the problem with this analysis right here is he's looking at their free cash flow multiple. He's not looking at their free cash flow margin. They're trading at a 36% free cash flow margin, which is actually in peer with a lot of other industry software companies. Their SBC is the same with a lot of industry software SaaS companies. And on top of that, you're always going to be paying a little bit more for a tech company that's high growth, right? So yes, 103 times free cash flow, that might seem a little bit like it's a lot given for the growth, but we're expecting the growth to come in the future. And at some level, you have to either agree the growth is going to be there or it's not. This year, it's not going to be there. 15, 16% growth, not super high growth. But given what we're seeing, what they're doing with AIP and what Karp has said about healthcare, I mean, we're expecting the growth to come. So if that's the case, $15 might become the new 11 for Palantir, quite frankly. And it might become cheap. I said I like buying under 14. I don't like buying above 14. That's kind of a rule that I have. But in general, I don't feel 14 as overvalued as I felt a couple of months ago because the company has changed. Fundamentally, there's been a lot of updates in the company in terms of what they've been able to do, a lot of different catalysts, a lot of different contracts, the Babcock partnership that went on. There's just so much stuff that I've seen from them personally that's led me to believe the company is on a real strong growth rate and trajectory. And we will see how it goes from there. Doug says they don't understand how many contracts are coming online after AIP. Yeah, I mean, remember, all these 150 clients we have, they're not monetized yet. And I think by November, that's going to be 200. And so if they're not monetized yet, when they get monetized, it's going to be really good for Palantir. Again, the Palantir story, Palantir's up 140% year to date. We haven't even seen Palantir go back to 12. We've seen it get stuck in 1390 and then it gets eaten up because people want the stock. The dip gets eaten up every time. So one thing people have to factor into their Palantir analysis is that it's a retail heavy stock and people like it. And that's something you have to think about as Tesla as well. It's hard to get Tesla to 200 or 180 or 170 when people like the stock. If Tesla fell to 230 today, people would be buying it. They like the company. And so I think that's the same thing in regards to Palantir as well. Want to give a shout out to Crossroads as well. It did a really good thread today on Palantir. So if you guys are not following him, I'm going to put his Twitter in the chat. Highly recommend following him. A really, really great thread and some awesome analysis on Palantir and healthcare writ large. Mathis, can you discuss AAP on finance? Because I will bring it up to the guys and tell them to take a look into it. And so they can discuss it a little bit more. All right. Not bad, folks. Pretty red market in the market open, but not as red as we would expect. Obviously, stocks are down, not down dramatically. S&P 500 holding on to 423, NASDAQ 13,200. Nothing too bad. Zermatt Holdings LLC says, give me a shout out. This is your shout out, Zermatt Holdings LLC. Thank you for being here. Let's end it off with word of the day, and we'll be done with today. Market open. AOLE. What type of word is this? AOLE? Aioli?
Aole.
Aole. It means not at all. Aole. When asked if he'd ever been to Hilo, he responded, Aole, never. This sounds like it's Spanish, bro. What? Aole? It's Hawaiian? Aole. Okay, so are you selling Palantir? Aole. No. This means no, apparently. Another word of the day is aficionado. This is for someone who both likes and knows a lot about a given interest or subject. I am trying to become an aficionado in the context of the stock market. Look at what Adam says. That's not a word. Aole. That's not English. That's hilarious. Aole. No. All right. Aole. So today, if someone asks you to do something you don't want to do it, your answer is aole. Will I use the word of the day? Aole. Yeah, that's, dictionary.com is letting me down. They were on a hot streak and now they're giving me these interesting words. All right, that's it for me. Thank you everybody for joining. I'll have the NHS Palantir video up in a couple of hours. We'll have that there, and we'll have Fine and Chunky's back at 7 p.m. Is today Wednesday or today's Thursday? Wow, today's Thursday. We're already here on Thursday. Wow. Okay, almost the end of the week. Thank you all for being here. I'll see you guys tomorrow. Appreciate you guys, and have a great, great Thursday. Thank you, everybody. See you later.